This is MacroVoices, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
MacroVoices episode 490 was produced on July 24th, 2025. I'm Eric Townsend. We've been inundated for months now with listener requests to bring Dr. Pippa Malmgren back for an update on how evolving presidential political agendas will affect macro markets. We had Pippa booked months ago, but then her father passed away just days before her scheduled interview, and she understandably asked us to give her some time and space to cope with her loss. So we're honored to dedicate this episode of MacroVoices to the memory of Dr. Harold Malmgren, who I was honored to interview way back in MacroVoices episode 39 on November 10th of 2016. And put your seatbelts on, folks, because Pippa's on fire in this week's feature interview, with predictions on topics ranging from stablecoins to reserve currency status of the dollar to the coming evolution to the seventh party system to the other stuff that you haven't heard about yet that Jeffrey Epstein was into, completely aside from his sex trafficking allegations. All of that's coming up in the feature interview.
And I'm Patrick Ceresna with the Macro Scoreboard week over week as of the close of Wednesday, July 24th, 2025. The S&P 500 index up 153 basis points, trading at 63.59. The primary bull trend relentlessly pushing higher. Where and when will that momentum run dry? We'll take a closer look at that chart and the key technical levels to watch in the post-game segment. The U.S. dollar index down 109 basis points, trading at 97.21. It's back down to year lows, but will we see that fresh breakdown to another leg lower? The September WTI crude oil contract down 170 basis points, trading at 75.25, trading back down to its 30-day lows along a key support line. The September RBOB gasoline down 48 basis points to 209. The August gold contract up 116 basis points, trading at 33.98, attempting a bullish breakout of that 3-month trade range. The September copper contract up 543 basis points, trading at 582, fresh 52-week highs on copper. Uranium up 49 basis points, trading at 72.40, and the U.S. 10-year Treasury yield down 8 basis points, trading at 4.40. Key news to watch next week, we have the U.S. GDP, the FOMC statement and press conference, the Bank of Japan monetary policy statement, the core PCE price index, and the U.S. jobs numbers. This week's feature interview guest is Dr. Pippa Malmgren. Eric and Pippa discuss stablecoins, Scott Bessent, and the bigger financial strategy, the intelligence agencies, declassification, and the future of markets. Eric's interview with Dr. Pippa Malmgren is coming up as MacroVoices continues right here at macrovoices.com.
And now, with this week's special guest, here's your host, Eric Townsend.
Joining me now is Dr. Pippa Malmgren, best-selling author of several books, as well as Pippa's Pen and Podcast, which, of course, is Pippa's Substack. Pippa, it's great to get you back on the show. I want to start, I know you've been writing a whole bunch of exciting stuff. We've got a link in our Research Roundup email to a piece you just wrote called O-Shocks. It's a lot of great content in that one. I want to talk specifically, though, about Bitcoin and cryptocurrency and stablecoins in particular, because when I first assessed this thing, I said to myself, governments are eventually going to wake up and recognize that cryptocurrency poses an existential threat to their governance or their monopoly over the issuance of money. What I never saw coming was the President of the United States would correctly recognize that, cheer it, and say, yes, let's take away the control of the issuance of money and take away that government monopoly and not let the government have it. never saw it coming. It seems to me like that changes quite a few things. What are your thoughts on how do stablecoins play in?
Oh, first of all, it's great to be back on with you. And it's always so much fun just to review where we are in the world with you. I've had a very strong view on these stable coins that's been quite out of the market, which is what they're basically doing is trying to rebalance the entire balance sheet of the nation. Now, that means they got to clean up the debt and the problems of the past, but they also have to build an economy of tomorrow. Now, one of the pieces of the stablecoin puzzle, the Bitcoin puzzle, is that it's a new way of financing tomorrow's ventures, the new Apples, the new Teslas. So it breaks the lock that Wall Street has had on who gets money. Because normally when you start a venture, you got to go to the venture capital guys or Wall Street or Silicon Valley, and they give money to almost no one. And you have to be a unicorn, a company that looks like it's going to be worth $1 billion in short order, which means your regular grocery store chain has zero chance. And most startups have zero chance. So you can only grow so quickly if you use the traditional equity, venture capital, IPO model. Even though it's the American dream for entrepreneurs, the reality is that it hasn't been a dream for many people. So Scott Bessent, the Secretary of the Treasury, I think is one of the greatest minds on national balance sheets alive today. I think he understands sovereign balance sheets better than anybody. And I think, look, he's been running money for a long time. He is the guy behind George Soros who broke the Bank of England. And he looked at this and went, we've got to make it easier for the next Tesla, for the next Apple, for the next grocery store chain that needs funding. So stable coins being interchangeable with US dollars suddenly allows that to happen. And you can see that the new ventures are not going to go to the equity markets as much as go to the stablecoin markets. So this is one piece of that. The second thing is, what is it collateralized with? And the answer is US Treasuries. So if you actually create an interchangeable stablecoin with US dollars, you're actually doing a number of things. You're creating demand for US Treasury. So now it's easier to fund the US deficit, the current account deficit through Treasuries than before. And not only that, but you effectively dollarize the whole world economy this way, right? Everybody will need to own dollars if they're going to be in stablecoin markets. So weirdly, it's a backdoor way of financing the United States. So the way I've been putting it is DeFi becomes refi. In other words, what you thought was decentralized finance, which was for many people a way of exiting the fiat financial system, actually becomes the mechanism by which you fund the fiat financial system. But there are other features too. And one of them I think is really important is the traditional American government has all these holes on their balance sheet, right? Nobody can explain where all the money is going. And as we saw with Elon Musk going into government with the Doge process, they found that there were all these payments going out from the US Treasury to no name, just a bank account with no explanation of what is it for. And so now he's mapped all that. There's a much clearer understanding of where the money is flowing. And the answer is it's not flowing to where it should be flowing. And a lot of it has now been shut down. For example, the whole story with the USAID, which isn't really about giving money for aid. It's really about financing all sorts of things that may not be what any given president has approved. And basically, if you are up against what Trump would call the deep state, this is a very easy way to end those cash flows and to demand that in future they're on much more transparent, digital, blockchain-based balance sheets. In other words, in the past, you could make payments and not have to explain where they went. But going forward, everything is going to be tracked and logged and tagged, and you won't be able to say, sorry, George retired, we're not sure where the money went, or we don't have the receipts, or the systems don't talk to each other. No, you're going to see right away where is the money going? So it's a way of defanging the deep state structure that opposes Trump. So there are a lot of features to stablecoins, but I think it's a revolution in finance. And I think it's akin to what the British did when they moved from using tally sticks for 1,000 years before 1834. And then they decided as a central system of money and accounting, and then they needed to inflate because of war debts. And they shifted to a new technology called paper money. And that shift created the foundation for the financing of the Industrial Revolution. And I think we are on the brink of a similar moment where this new methodology is going to allow us to fund tomorrow's economy much more easily. So I think it's really a very exciting time.
Pippa, I just realized that we should define stablecoins for any of our listeners who are not familiar with them. When you buy a unit of cryptocurrency like Bitcoin, when you buy a Bitcoin, you're buying a digital token which represents an ownership claim of one unit of digital currency system called Bitcoin. Its value comes from its marketing and its uniqueness or its scarcity, and it's the fixed money supply that's limited that gives it its value. When we talk about a stable coin, what we're talking about is the same kind of digital token that works on a blockchain, but now it's giving you ownership of one share of something which is actually backed by US dollars. Hang on a second, Pippa. How well developed is the infrastructure behind these stablecoins? How well regulated and how certain are we that there really are US dollars backing the stablecoins and it's not a scam?
These are all excellent questions. First, I think a way to think about it is effectively what the new legislation Congress has just passed calls for is for private institutions to issue their own stablecoins. So imagine if a Citigroup or a Wells Fargo, or even a Costco, that they will send you stable coins, and then they'll be in your digital wallet. They'll just appear in the middle of the night in an email, or you'll get some notification. The key thing is that we don't know what the value is going to be. We know that they'll be convertible on some basis into US dollars. They may have more features of special deals you can do with that company by owning them. But the most important thing for me is that when banks issue them, it turns you as a depositor in a bank from being a person at the bottom of the credit totem pole to one at the top. Now, why do you care about that? If a bank goes bust, currently, as a depositor, you're the last to get paid. And that's why we set up the FDIC, in order to protect the depositors up to $100,000 per account. But I think Trump and Bessent think that there's still a lot of bad banks and bad debts, zombie assets left over from the financial crisis that only exist because of all the liquidity that got thrown into the markets. And if we could get rid of those, the economy would function better. So how are you going to get rid of those? One way is you convert the depositors into senior creditors. And it's via those stable coins that you acquire the right to be at the top of that credit pole. So if something happens to the bank that you're a depositor with, you are protected without having to turn to the FDIC. And so what this tells us is that part of the stablecoin strategy is to do what I call a controlled demolition of the old rotten assets that are weighing down bank and institutional balance sheets and free them up to do more productive things with that capital. And so to finish on this, I fear this may be a little bit like what happened when the Soviet Union fell apart and they created the new Russia and they distributed pieces of paper to every citizen saying, you now own part of the electricity company and part of the water company. And people didn't understand what these little pieces of paper really were. And so a bunch of smart people got together and went around door to door saying, hey, I'll buy your pieces of paper for $1,000. And $1,000 was a lot. So lots of people sold those pieces of paper. And then it turned out they were really valuable. And that's how the oligarchs in Russia came into being. They just spotted that the public was ignorant of the true value of these pieces of paper the government had issued. This time, it won't be pieces of paper. It'll be digital tokens. But I think it might be the same as we don't know yet how valuable these will be with one firm or one bank versus another. So when you get them, you should just hang on to them. And I'm not sure it's smart for everybody to start trying to trade in this stuff. The first thing is let the market be established. And then we'll begin to see what's really going on. But when you're given these assets, the key point is don't give them away.
Pippa, something that I have learned from you over the years is you're very good at seeing the bigger picture, stepping back and just seeing how things fit together. Help me understand more about Scott Bessent. This guy, I was not familiar with his background. I didn't know how well connected he was to the Soros organization and so forth. I mean, he's a really seasoned guy. He seems to be almost like the Henry Kissinger of this administration, the guy who's got the financial plan that almost nobody else understands. Is that right? And if so, where is it all headed?
Look, Scott Bessent has an outstanding reputation for being an absolute genius and a very straight arrow. And also, as we have seen, very calm under pressure. He's hugely respected, very close with people like Stanley Druckenmiller, connected into all of the players in financial markets that we know and respect. He started his own fund. I think it's called Key Square Capital, did incredibly well. So the important thing here is we basically have not just a trader, but someone we might have called a bond market vigilante in the old days. In other words, someone who is trying to protect the debt position of the United States from a disaster. And I know from personal experience living in Washington, D.C., that there's still in Washington a view that there's no problem with the debt, and anybody who says there is a problem is an alarmist, and we just have to grow our way out of this thing. It's all going to be fine. But that's not Scott Bessent's view. He thinks that we already are in a very serious predicament, given that the United States completely depends on foreigners to fund the gap between our savings and our current account deficit. And so he is saying, we got to fix this right now. We are not going to wait. And there are many different ways that he's now doing that. So some of it is let's cut some costs, but there's a limit to what you can do without enraging the public and getting thrown out of office, becoming incredibly unpopular. But some of that is happening. Some of it is about explaining how the U.S. is going to generate revenue from unusual sources. So this gets us into the tariff issue. And just to be clear, I wrote my PhD on trade policy at the London School of Economics. My father was the principal negotiator for the United States on trade policy and basically did all the big free trade deals through the mid-60s through to the 74 Trade Act. And he consulted on them to many governments after that. So I come from a free trade background. And so it's very common right now for everybody to criticize the tariffs. But if you just step back for a moment, the tariffs were a negotiating tool used to make a threat because most countries desperately need access to the U.S. consumer. And so when confronted by a huge tariff, they all went, oh, okay, I dropped my tariffs to zero. So for example, Vietnam did that. They went, okay, uncle, I give up. I'll go to zero. And we went, great, we'll join you just about there. We basically now have a free trade zone with Vietnam. And a lot of the economic activity in Asia is now funneling through Vietnam to their great advantage. And this strategy means that the Treasury is now generating revenue from tariffs. And $50 billion is the most recent number, which is not insignificant. Now, here's the deal. Before 1913-14, all of the revenue to the U.S. Treasury came from tariffs because we didn't have income tax. It's only after income tax and the Federal Reserve were introduced that revenue started to come from that source. So part of what Bessent and Trump are doing is saying, wait a minute, the terms and conditions of accessing the U.S. consumer need to change in favor of the U.S. consumer and the U.S. worker. And one way to do this is you get the foreigners to agree to overall lower tariffs, but pay more than they did before. And now we go back to the American taxpayer and say, by the way, we can cut your taxes because we're generating revenue from this other overseas force. And that, I think people have not yet understood that this is part of the strategy. And I'll give you one more piece of this puzzle, which, again, Bessent has thought through very clearly, which is this is an attack not on foreign governments, but on U.S. and Western corporations. Now, I'm going to use a European example for the moment, but it applies to U.S. companies. Basically, all these big corporates moved all the jobs to China because it was cheaper. But they then didn't pay the Chinese workers anything. They had them on terrible wages. And they also sold those products to us in America and the European consumers for a fortune, while leaving all their profits offshore so they couldn't be taxed. So Bessent's like, yeah, no, this is not going to work, guys. Like, you can't move all the jobs and pay the Chinese nothing and pay the American workers nothing and pay no taxes and charge us all a fortune for the product. So the tariffs were a way of breaking that cycle. And you notice it was so fascinating on Instagram, watching all these Chinese workers that were making the handbags for big European luxury goods companies. They suddenly were jumping up and down and saying, hey, I make those handbags, not the people in Italy, not the people in France. And why don't you guys just buy from me direct? Because I'm way cheaper. And by the way, I have my own design ideas, which you might find interesting. The consumers jumped and went, I would love to buy from these guys. They're so much more fun. It's more interesting. So the corporations that were taking the middle and taking all the money, basically no one is crying for them, right? Like, really, nobody's upset if their margin gets hurt. And this is also a way of then making it clear through market signals that actually manufacturing something in the U.S. makes sense. So again, one more piece of this is look at both Toyota and Haier. So Toyota moved their manufacturing to the U.S. near around 2000, maybe a bit earlier. And again, it was so interesting because my dad knew Mr. Toyota and was asked to advise on that decision. And they had this fascinating conversation about whether the Japanese should start making cars in the U.S. because they were coming under huge pressure to either face tariffs or penalties for selling too many cars into the U.S., which was making it hard for U.S. auto manufacturers. And so they agreed, actually, the right solution is start making cars in the U.S. Now, that was at a time when everybody was moving auto production offshore. So that sounded crazy. But Toyota-san said, wait a minute, I'd like to make them in a part of America where there's a sense of community, not where we usually see cars made in America, where it's heavily unionized. And the reason is because Toyota's manufacturing line is not unionized. And so everybody can do everybody else's job. But in the US, it's like you either do the tires or you do the steering wheel or you do the paint, but you don't do all of them. So my dad had said, you guys should look at the South then, because that's a part of the country where if your house burns down, all the neighbors come out and help you build a new house. And Toyota was like, that's it. That's great. McKinsey's telling me to make it in the traditional places, but this is a better idea. And that's how they chose Lexington, Kentucky. Now, that plant is now the most profitable Toyota plant in the world, more than Japan. And it has higher U.S. auto content than any manufacturer, including all the American ones. And then there's Haier, the Chinese white goods company who have a similarly wonderful story. They too started making white goods, meaning refrigerators and things like that, small household appliances in the US at about the same time. And everyone said, you guys are crazy. Why are you making refrigerators in the US? It's cheaper in China. And their CEO said, no, we need to do it in the US because the US consumer is the most important and the most discerning. We have to learn how to work with them. We have to learn quality control. And he famously smashed 75 refrigerators on an assembly line because they all had scratch on them, which was at the time like an incredible amount of capital that he destroyed. But it was to send the message. We are selling to Americans. They cannot handle a scratch. So we got to lift our quality control game. And they did. And Americans loved their refrigerators. They bought them en masse. And they finally ended up buying the white goods division of General Electric for, I think it was $5.4 billion. And they still run it now. So the idea that the Chinese cannot sell directly to Americans, they cannot manufacture in the United States is just not true. And so what Bessent is thinking through is how do we create the conditions for this to happen? And I think it is happening.
Well, I agree with you, Pippa, and I just want to put this in perspective. It sounds like you and I agree that Scott Bessent didn't come take the Treasury Secretary job just so he could oversee the issuance of operations of currency during the course of his time in office. He came to do this, as far as I can tell, for the purpose of re-architecting the global monetary system and rethinking the way the capital formation process delivers capital to formative new businesses. That's really big. Is that an exaggeration for me to say that's what this guy is up to?
No, that is exactly what he is doing. He is re-architecting the global financial system in a way.
And the capital formation process for private capital, calmly and quietly, whilst hoping nobody notices from the looks of things.
Yeah, not just for the US as well, also for China. So, for example, I think there's something going on that's really important in China right now, which is a split between the CCP, the Communist Party, and Xi, the premier. And what's going on is the Communist Party is looking at this saying, look, what Trump and Bessent are offering China is a road into the future. Unlike the previous administration that was saying, just cancel China, right? Just block them. But you can't block 7 billion people. They're not just going to go quietly into poverty. You have to make a way for them to have hope in the future. And that is what is being offered by this new arrangement. And interestingly, the Communist Party has been clearly having internal conversations going, wait, why are we talking about going to war with the Americans? Because, we don't have the demographics for that. The economy is in no shape for that. And in fact, Trump is saying he's willing to negotiate over Taiwan. So we don't need to have a fight about that. But what we do need is to build revenue, income, higher standards of living, cash flow for workers. And actually, this road that Scott Bessent is showing us would provide that hope for a better future. And so slowly you start to hear about strategies and positions that are not what we were hearing from Xi Jinping. So they're even succeeding in shifting the domestic policy position in a place like China.
Pippa, you've written about a sixth party system giving way to a seventh party system. What the heck are you talking about?
Okay, so all you have to do is go to Wikipedia and write in sixth party system, and you're going to get the explanation. But in short, we Americans don't have a long memory. We forget that we are not on the first system of parties in the United States, right? We used to have the Federalists and we had the Whigs, and where the heck did they all go? The answer is we have had 5 different party systems since the foundation of the Republic. Today, we're on what's called the sixth. The sixth party system involves 2 main parties, Republicans and Democrats. But I think that this current party system is failing on both sides. And we're leaning into what will become known as the seventh party system. Now, we could go into what do I mean by why are they failing and what does the seventh party system look like? But I'm just making the point that we have done this 5 times before. So it's not new. It's just people don't remember that we used to have other parties in the past that also disappeared and reformed into something more modern and more useful.
Pippa, let's jump into something that's been in the news in a big way, which is Jeffrey Epstein. Frankly, I don't want to talk on MacroVoices about all the sex scandal stuff and sex trafficking, certainly with respect to the victims. It's a horrible thing, but it has nothing to do with macroeconomics. You're the only person I've ever heard say, hey, everybody, stop paying attention to the sex scandal and look at what else Jeffrey Epstein was into. Tell us more.
I think this is the key. He was clearly deeply involved in financing deals between mega investors and leading scientists, leading technologists. And it appears more and more that these were deals that the intelligence community was also involved in. And it's complex because one position is he didn't work for the intelligence agencies, but that overlooks the problem that intelligence agencies also have people working with them, not just for them. Technically, he wasn't an asset, but he was a kind of friend. He was a liaison. He was a person who navigated complicated deals that governments didn't necessarily want their fingerprints on. And there are lots of people in history like this. Mark Rich was famous for being like this, who was a metals trader. There are a number of characters in history that played this role. Ironically, one of them was the father of Epstein's partner, Ghislaine Maxwell. And the father, Maxwell, was also very renowned for being deeply involved in the science and technology community through his publishing business, which basically pretty much invented the whole peer review system, which was a way of making sure that certain scientists and certain science and certain technology would be promoted and others would not. It was the creation of a club. So the question is, what were these deals? Why was, for example, in 2004, why was Epstein holding a conference on gravity with Sir Stephen Hawking and many of the great physicists of that time? What the heck was he doing on that subject? Or in other areas of science like genetics, where he was clearly working with Harvard and the Gates Foundation. And how did that happen? And I just wonder whether actually this was the sort of person who was useful for governments to use in managing the evolution of very cutting edge technologies. For example, Eric Weinstein, who's one of the most prominent physicists today, he says Epstein was involved with Harvard when Weinstein was still a student there, and Epstein knew a ton about his work in cutting edge mathematics. And Weinstein today is like, I want to know, why the heck was this guy involved with Harvard, and how did he know so much about what I was doing in mathematics? So they're also connected to other weird elements of this. Like, it's super bizarre that Epstein was hired to teach at a very prestigious math and science high school in New York City by a guy called Donald Barr, whose son, Bill Barr, was the attorney general that initially had Epstein arrested and oversaw the case when Epstein supposedly committed suicide. What? And it turns out that Donald Barr's other son is a very prominent nuclear physicist who works on things like non-gravitational forces and the process by which matter came to dominate over antimatter in the universe. Like, the overlap between Epstein's life and science and physics is just quite profound. Again, this is at the heart of the question is, it may be what we're looking at is it's not about Epstein, the person. In that sense, the president may be absolutely right. He is not very interesting, but the system he represents is very interesting and very important for us to understand if we're going to make sense of how the U.S. economy and the world economy actually work. So one other thing to understand as well is that whenever you have really terrible scandals, when things have gone really wrong, it's actually quite typical in history to just disappeared. It just, what? I don't know anything about this. I know that sounds crazy, but for example, this is what happened at the end of World War II when a number of very prominent Nazis suddenly were pretty much exonerated. There was a guy called Otto Skorzeny who had been Hitler's personal bodyguard. He had been the head of the Waffen SS. He was considered the most dangerous man in Europe. He was basically Hitler's head of special operations, right? Special ops guy. And next thing you know, he's let off by The Hague and he ends up living in a very nice house in the west of Ireland until I think it was in the 60s. The neighbors figured out who he was. He gets moved to Marbella in Spain, which is a very beautiful, elegant, sunny place. And wait, how is this even possible? Like, why didn't any Nazi hunters go after him? And you realize because he was working with all the intelligence services, like all of them. Why? Because he was so skilled at what he did, they needed him. And so when you get to the end of a really terrible episode, it is not uncommon to say, and it's gone. Just like in that South Park episode, and it's gone. And this is kind of what we're seeing with this particular case. And I was just in Berlin last weekend at this extraordinary site called Teufelsberg, which is this massive physical listening station that was originally, it's in the middle of a forest in Berlin, overlooking the city. And originally, the Nazis created it to house their super high-tech, super secret technology center. And then it just got abandoned. And then the American NSA took it over and put in these huge domes to listen to the city, right? It was a very Cold War kind of phenomena. And I think 1961 they went in. And today you go there and it's clear that everybody just walked away one day. It just was totally abandoned. So now it's covered in graffiti and the domes are all disintegrating and nobody's ever refurbished this place. And you're like, what the heck? How is this even possible? And the answer is, if the scandal is too large, you just walk away and it's gone. And I think that's part of the kind of, it's like an ontological shock. I call it an O shock. It's a wait, but this can't be right. But you're busy doing other things. And the hope is you'll just forget about it. You'll forget. And that was sort of bet with JFK assassination. And I think it's very interesting that Tulsi Gabbard is releasing all these background documents on all these various scandals, the Martin Luther King files, the John F. Kennedy files, now the files on what happened with Russiagate and the investigation into it, which was called, what was it called? Hurricane. I'm just flaky.
Crossfire Hurricane.
Yeah, that's it. Thank you. Crossfire Hurricane. And suddenly all of these documents being released all at once, revealing little hints and drips and drabs that maybe what happened is not the official story of what happened, and leaving it to us, the public, to start connecting the dots and figure out how much does the public want to get into this and seek justice, seek reform, seek repair, and how much does the public like whatever moving right along? It's an open question.
It seems to me that this is an incredibly important crossroad or moment in political history from the standpoint that Tulsi Gabbard, in her official capacity, just accused a former president of the United States of essentially high treason. I don't know if they've ascribed that particular crime to it, but she's basically said that President Obama intentionally manipulated the elections while pretending that Russia was doing that. The real manipulator of the 2016 election was Barack Obama, not Vladimir Putin, according to Tulsi Gabbard. That's a just damning allegation for someone in an official capacity to make that level of allegation against a former president is probably historic by itself. And if true, it's absolutely staggering. Are we seeing what are we seeing? Are we seeing the unmasking of the U.S. government where the American people finally realize that it's always been a little more corrupt than they thought? Or are we seeing the beginning of a really big change where things fall apart?
Or both. I think this is why she also released all the supporting documentation, including, amazingly, portions of the president's daily briefing, which is unheard of. And she's releasing the notes, handwritten notes by various parties involved. And to be clear, she's not only aiming the criticism and the allegation at former President Obama. She's also aiming at the former head of the CIA, former officials that were all involved in what seems to be a very deliberate effort to say the intelligence services said, they did their report, they said, we see no evidence that the Russians interfered with the election, and we don't even think they're capable of it. And a decision was taken to chuck that and write a report saying that they were. And so this is something extraordinary, the fabrication of evidence, not just saying an interpretation, but the fabrication of evidence. So this is a massive allegation, and it will necessarily involve getting deep into stuff that's traditionally always been super secret, super classified. And I think that's part of what Gabbard and Trump are trying to do is open the visibility to the American public, because otherwise it's all hidden. And they're saying, okay, let's bring it into the public domain where the public can look at it themselves. Now, whether that actually means that their interpretation is correct, I don't know. But we have a massive scandal here. And this is already a much bigger deal than Watergate. Partly, too, because what the allegation is that maybe every president has been maneuvered, manipulated, dictated to. There's still a possibility that Obama's name may be on this, but it's not voluntary. Maybe he got railroaded into having to do this as well. That's a possibility, is that he didn't direct it. He was directed to do this. So basically, Trump and Gabbard are opening up the whole question of what is the relationship between the civil service and the intelligence services and any sitting president, not just one, but any of them.
Well, Pippa, this is a perfect segue to something I've wanted to ask you about, because I'm very concerned about the way the news doesn't get processed. We're talking here about the Director of National Intelligence. That's the person who's overseeing the intelligence agencies of the United States of America, making a formal announcement in her capacity in that official role, saying essentially that the intelligence agencies of the United States of America are untrustworthy and should not be trusted at their word. Is there any example or precedent in American history, Pippa, where the incoming political administration basically announced that the government was corrupt in the previous administration and that the public should not trust their government?
Well, let me phrase it a little differently. Have we had presidents who came in and didn't trust their intelligence community or feared them Yeah, we've seen that a lot. And that was exactly John F. Kennedy's position. And he was in battle with both his intelligence community and the military and had huge fights with them. And no, Eisenhower, when he left office, and he basically said the military industrial complex, by which he meant the military and intelligence communities, are not to be trusted. Like, it's not a new position, but proving it is the thing. And again, what this administration seems willing to do is to say all those things that are classified, yeah, forget it. If it's really to do with, say, nuclear secrets, okay, we won't declassify it. But if it's anything else, we're declassifying it. And suddenly that whole community is like, naked. How do you explain stuff that you thought would never see light of day? Memos and notes and official comment. Like, it's unimaginable to the intelligence community that any president would expose them. But that is what's happening. The fight that Kennedy had at the time was not so different, I think, than the one we're seeing now, but he was not in a position to reveal to the public the things that were classified. But Trump, he's like, unless it's seriously needing to be classified, forget it.
Well, Pippa, this is something that I know hits very close to home for you because your dad, Dr. Harold Malmgren, was an advisor to President Kennedy. He worked directly in the Kennedy administration. He was actually an advisor to 4 different U.S. presidents during his career. Very successful, very respected man. Just before his death, he basically went whistleblower and felt that he had to divulge some of the things that he knew, made some absolutely shocking revelations that were completely ignored. And what is really striking to me, Pippa, is if this was some blogger, conspiracy theorist guy someplace, okay, fine, maybe he's got a theory about something, nobody takes it seriously, whatever. This is a guy who worked in the White House for the President of the United States, and he's saying that there was an incredible degree of corruption and evil, frankly, in the 1950s and 60s in the United States government. He's alleged that General Curtis LeMay was behind a master plan where the United States would initiate a first strike that would essentially be about 500 to 1,000 Nazi genocide-style genocides all at once on top of each other, killing 1 billion human beings around the world. Curtis LeMay was going to go do that, according to your dad. Your dad makes that allegation, and it's not that your dad got debunked as being wrong or accused of being a conspiracy theorist. He was completely ignored. So when I went to debunk that, I went and checked it out, and I found out, wait a minute, no, actually, there was a book written by Daniel Ellsberg back in 2017, basically revealing most of that the U.S. planned an initial nuclear first strike that would have been a genocide against about 1/3 of the planet's population. And that bit of history has just been erased and forgotten. Your dad tried to bring it to light just before he died, and it was completely ignored. Your dad also brought to light that he had personal knowledge of the U.S. covering up its being in possession of crashed alien spacecraft. Talk about a conspiracy theory. I want to see if a guy at the level of your dad's experience in government makes allegations like that. I think they should either be debunked or a subject of great concern. It seems like we've transitioned to where if the government doesn't tell the media that something's part of the important narrative, it's just not in the news.
It's so interesting. He did do this long interview, and there have been people that are trying to debunk him. It's been fascinating to watch. Now, I've got his papers, and it's very clear that on this issue of the U.S. military having a much more aggressive position than we might have realized, my dad wrote a paper for the Institute for Defense Analysis during the period of the Cuban Missile Crisis on protracted nuclear war. And the issue really was that Daniel Ellsberg and my dad had been good friends since they both worked for Tom Schelling as research assistants at Harvard. And Daniel Ellsberg is famous for the Pentagon Papers, right? He's the guy who released the papers that said the Pentagon's lying about Vietnam. We're not winning, we're losing, and they're just lying to the president. They're lying to the public. So that became a massive scandal. But this is a good more than a decade before that. And JFK asks Ellsberg, a former Marine, to go out to Asia and meet with the individual American pilots who have nuclear weapons and ask them, under what circumstances would you launch? Because Kennedy is being told that he has the nuclear football and he controls the ultimate decision of when to launch nuclear weapons. But he doubts that he's being told the truth. So he asks Ellsberg, can you go out there quietly and just tell me what you think? Ellsberg writes this book about how he went and visited these guys, and they also, if I get the order, I'm going to get the plane in the air and I'm going to head to whatever's closest, Russia or China. And Ellsberg says, but you need presidential confirmation. Are you going to wait for that? And they said, in theory, yeah, the power goes out like 3 times a day. So if we didn't get it, we probably would just go ahead. And Ellsberg goes, well, wait a minute. Why would you drop it on China if Russia was the problem? And they said, oh, but that's just the plan. We just hit them all. That's our orders. So he comes back to tell Kennedy this, and Kennedy's horrified, right? And he goes to the military and says, you're not telling me the truth about your actual battle plan. And they say, no, we are. And Ellsberg says, no, you're not. And he gets a copy of the official plan and gives it to Kennedy. And Kennedy now can see that they're trying to run circles around him. Anyway, the key here is that the assessment at the time was that, and remember, LeMay is the guy who firebombed Tokyo. He's the guy who dropped the nuclear weapons on the Japanese. He later wanted to drop nuclear weapons on the Vietnamese. He's the guy that Dr. Strangelove is modeled after, right? The guy who wants to just nuke everything. And so he and the whole Joint Chiefs team that were also of this way of thinking, they were in a mode to do this, to basically finish the argument with the communist world by eliminating it. And so my dad is like this young 27-year-old who is asked to be a liaison between the Joint Chiefs and the White House. And he's told, look, we got to do everything possible to slow these people down to buy time for diplomacy. And that is what happened in the end, is that Kennedy did get time for diplomacy. He did reach out to Khrushchev, and he did make a number of offers. One was, we need to reduce the number of nuclear weapons. We need to do space together. We need to work together to prevent any situation that might end in a catastrophe for Earth. And the estimate that they had at the time, Ellsberg, my dad, the team at RAND that they were part of, that were working on all this, was basically 1 billion dead. 1 billion. And so you can imagine the stakes were so high, and we ended up without 1 billion dead. And by the way, as a backstory, it's super interesting that one of the things that provoked the crisis was the United States put Jupiter nuclear missiles into Italy and Turkey around 1960. And it happens, my dad was in Turkey in 1958. And I was like, wait, Dad, what were you doing in Turkey in 1958? And in the past, when I was a kid, he'd always said, oh, we were there because I was working for the government. Then more recently, I'm like, wait, there was a coup in Turkey at that time. Is this a situation where the U.S. backed a coup and managed to get nuclear weapons into Turkey, which of course was a dagger at the heart of the then Soviet Union, and explains why Khrushchev then sent the ships into Cuba? It was in response. And we ended up removing those nuclear weapons. And that was part of a deal that they also removed their ships from Cuba. And it was agreed that that would remain a state secret for 25 years. And the American public would not know that the U.S. had played any part in provoking the confrontation to begin with. So look, the point is these stories are very complex. Most Americans today, it's too old, it's too far out of their memory. But the reality is that for people paying attention, these stories of, wait, what actually happened? What has our true history been? They do matter. And I was recently in a dialogue with a journalist who said something along the lines of, well, history is already adjudicated. And I'm like, no, it's not actually. And especially now that we have artificial intelligence and we have supercomputing and we have the capacity to go back and look at documents that have never really been reviewed to make sure, is the story that officially exists really commensurate with the truth? Or is there something else that we need to understand? By the way, I was very interested when we had Watergate and Bob Woodward from the Washington Post, Carl Bernstein from the Washington Post broke open that case, which led to President Nixon having to resign. And later, Carl Bernstein wrote a really interesting article. I think it was in Vanity Fair in 1974, where he said, I've discovered that some of my colleagues at the Washington Post are actually working for the intelligence agencies. And in fact, I estimate that 400 of the top journalists in Washington, D.C. are actually intelligence assets. Now, the question is, did that ever end? And that's one of the issues today is like, wait, where is the line between what is independent news and what is the state trying to manage the official narrative? And of course, we all know, especially during the COVID period, there was this whole new reach by government into Silicon Valley, into the news media. It's famously referred to as weapons of mass deletion, cancel culture, shadow banning. Anybody who said something that wasn't part of the accepted narrative kind of got annihilated. Why? Was it random or was it official government position? We know it was official government position now. Addressing these things is really part of the fundamental democratic process. I'm not raising them to be awkward and obnoxious to the intelligence community. The fact is, we need an intelligence community. We need a strong one. And these things are interrupting public confidence in that community. And so it's important that we understand what's really driving presidential decision-making. Who's making the decisions? That's why I say it's an ontological issue. Is the president really in charge? Like you assume, yeah, but maybe not. Maybe lots of things happen that are beyond the president's control. And these are things for us to think about.
Pippa, I can't thank you enough for a terrific interview. But before I let you go, tell me a little bit more about Pippa's Pen and Podcast. We've got the link in the Research Roundup email to the latest post, which is called O-Shocks. And tell us a little bit about what people can find there, too.
Sure. So what I'm doing with that column is focusing on the nexus between geopolitics, tech innovation, markets, and strategic security. It's where these things all meet, trying to help us navigate into what is coming in the future. And most of my stuff is, I have to say, I'm ruthlessly optimistic about what the future is bringing us. Things like, as Silicon Valley are telling us all the time that the cost of compute is falling to practically nothing, the cost of energy, the cost of delivery, and therefore we should be planning accordingly for an abundance in the future, not scarcity. So I approach this from lots of different angles, but I'm trying to give people a different way of thinking about what's coming on the landscape of the world economy that's important for anyone, whether you're an investor or you're just a regular person. What is the future starting to look like and how to help you see it sooner than you might otherwise?
Patrick Ceresna and I will be back as MacroVoices continues right here at macrovoices.com.
Now, back to your hosts, Eric Townsend and Patrick Ceresna.
Eric, it was great to have Pippa back on the show. Now let's get to that chart deck. Listeners, you're going to find the download link for the post-game chart deck in your Research Roundup email. If you don't have a Research Roundup email, it means that you have not yet registered at MacroVoices.com. Just go to our homepage, MacroVoices.com, and click on the red button over Pippa's picture saying, looking for the downloads.
Patrick, let's kick it off with the S&P 500. What are the charts telling you this week?
Eric, the bulls have relentlessly been in command of this trend, being driven by a handful of those core mag stocks that have been driving this just by their market cap weighting. And the breadth of the market has been relatively thin, but that hasn't mattered to the market cap weighted indice. We have a market that continues to press fresh new highs, and the primary trend, higher highs, higher lows, above all moving averages, continues. Now, we are at quite an extreme level. For instance, we have not seen the RSI at such an overbought level since last summer of 2024, right before the Japanese carry trade started to unwind. At the same time, we're almost 300 S&P points above the 50-day moving average, and just the amount of days that we have seen sustained above a 20-period moving average is unprecedented. We don't see this very often. That doesn't mean that it's got to end today, but we are definitely got the characteristics of a 8th, 9th inning of this advance. Now, that doesn't mean that there has to be a scary market correction on the other side, where the market has to drop 10 to 20%. It often on the first sell-off is a typical 5% correction. And by the fact that we're just 300 points above the 50-day, that would basically be a bullish retest of the 50-day moving average if we just got a 5% correction. And so the bulls have a lot of leeway here that will probably keep these markets going through a bigger topping formation or along their highs deep into August. And this is in line with the fact that a lot of vol targeting funds, as the realized volatility now is about to continue to contract, will be doing structural buying next week. Some of the analysts and quants are anticipating as much as $40 billion net of buying coming into the market. The bottom line is that should keep this market at elevated levels, even if we do have one of these quick 200 to 300 S&P point corrections. The bigger question is, when would we go through a deeper, more meaningful pullback? Well, we are, from a seasonality perspective, getting into a period that is typically weak. As we get into the latter part of August into September, October, are periods where flows pivot and distribution can come. So right now, going into this last week of July, especially, we have some major earnings coming out on some of the Mag 7s next week. We have a tariff deadline on Friday, as well as jobs numbers. So a lot of things that could bring some volatility next week, but probably we're going to see things remain relatively kind of stable and quiet and in this prevailing trend, at least probably towards the next week's episode. So let's see how it plays out. Right now, nothing ominous, unless, of course, a curveball is thrown to the markets. Now, Eric, let's move on and talk about this U.S. dollar. What are your thoughts here?
Patrick, overall, I'm still structurally bearish on the U.S. dollar. I said last week that I thought a counter-trend rally was overdue, but then I went on to say I had a feeling it wasn't going to be on that swing, but maybe one or two more downswings before we see that counter-trend move develop. Well, sure enough, the formative upside move we discussed last week failed, reinforcing my bearish trend view. But I'm still on the watch for signs of that counter-trend rally. My target on the downside structurally is 89 on the Dixie. There's no way we're going to get all the way to 89 from here without at least one meaningful, and probably at least two meaningful counter-trend rallies along the way. The first of those is already overdue, so that's what I'm on the lookout for.
Well, Eric, the bears are decisively still in control. The lower lows and lower highs persist in a downwards channel. When we got into an oversold state at the end of June, it started a bounce, but the bounce had very weak price action. And even when it temporarily accelerated toward that 50-day moving average, immediately rejected and traded right back down to lows. That's active distribution. This is definitive price action that is pushing the dollar weakness narrative. Zero evidence that the bulls have pivoted. At some stage, when such a crowded trade and such a consensus trade is in play, there's always room for a short squeeze. But we want to see technically that some sort of buying has started that could be triggering that. And the fact that that July rally was as weak as it was, we have to assume that the bears remain in control. Double bottom retest is the first base case, but if it breaks to a lower low, the measured target is down to 95 handle on the Dixie. Yes, in the bigger picture, when we step back, look at a weekly chart and look at back that at 2021 and even back in 2018, that US dollar had major lows in that 89.90 level that you referenced. That could be a very realistic target, but that would probably be a target for 2026. The likelihood that this year houses such a dramatic dollar move, while it's possible, I don't think one should be, let's say, playing short-term options like 2-3 months out with that kind of a lower target. I think you need to have more time on that kind of a trade to see through that kind of a lower target. Will we see a squeeze at some point? At this moment, the one thing that I'd want to see is that a support line holds. We quick rally back to that 50-day moving average. Just something showing that somebody is pivoting to the buy side and driving the flows the other way. There's zero evidence of that up till now. All right, Eric, let's touch on oil.
Patrick, I don't see a directional trade that's really appealing here. What I do have on is the time spread trade, long Z5, short M6. That has continued to perform well despite the big retraction in weak flat price. I've actually seen further positive performance on the spread trade. The front month, the front spread now, which is the August-September spread, is still wider than $1. My nearest exposure would be 4 months later on the December to January contract. That's only at 22 cents now. I wouldn't expect it to be much wider than that 4 months out. But by the time the December contract is nearing expiry in mid-November, driving season will be behind us. It'll be shoulder season. That's going to mean smaller backwardation coming into expiry. We're not going to have the $1.50 that we've had for the last few months. But I think we're still going to be much closer to the current $1 level, maybe well above 50 cents, closer to, let's say, probably at least 75 cents at expiry as opposed to 22 cents now. Of course, lots could change on that, but that to me is a much more compelling trade than trying to take a directional view on the flat price.
Well, in my mind, oil's in a price action purgatory. It doesn't really have a catalyst to really trade back down to the $55 level or lower where it was trading back in April and May, but at the same time, no immediate catalyst to drive mid-70s oil prices. And so we're stuck in this range. I don't anticipate any big volatility here, but what's interesting is that those energy equities are getting a little bit of attention. And the question here is that in spite of oil's kind of lull price action, will we see the energy equities pick up here and start to trend? And that's something that's I'm watching closely at this stage. All right, Eric, let's talk gold.
Well, last week we were lurking around close to the bottom of the vertical range in the symmetrical triangle pattern that's formed here. That's about a $180 vertical range. Well, that was last week. Now we're bouncing off a perfect test of the top trend line in that symmetrical triangle at 34.50. I still think that the most likely resolution of this triangle will be to the upside, and that will probably begin an accelerated upside rally towards towards at least 3,700. But there's plenty of room to go down and retest the bottom trend line, which is now at about 3,300, on reactions to rumors of a 15% U.S.-European Union tariff deal, which were circulating on Wednesday, probably the reason that gold took it on the nose on Wednesday morning. How long does it take for that to blow over? We'll see, but I think it will blow over eventually. The upside momentum will be back as that tariff news blows over, and I expect the rally to resume then towards new all-time highs above 3,500 and pressing toward 3,700. The thing to watch for would be a decisive close well below 3,300 and staying there for several days. That would be the sign that I read the market wrong and it's not playing out the way I thought. As of now, though, until we see a close below 3,300, everything looks bullish to me.
Well, to me, there's one big horizontal triangle pattern developing, connecting those May and June lows along with the April and June highs that is coiling this up in a range. Now, we had earlier this week a decisive attempt to break out on the upside of gold, and here we are a couple days giving a good chunk of it back. Now, will the bulls be able to buy this dip and get it back above 3,400 is the puzzle to solve. Overall, the bulls have been in control up until now, and so to come up with a bear scenario, I'd want to first see some sort of bearish price action, and the real test will be right now with this type of a 2-day drop in gold that we're seeing here. Like it was right now up to this point of recording about a $90 pullback off the high. Will it get bought on dip? That would demonstrate that the accumulation cycle is strong. To me, what would be the first deterioration in the price action would be a breakdown below the 50-day moving average, and more importantly, entirely reversing the breakout attempt that we had here on the upside of gold. If we saw that, then that really means that the gold bulls simply are not able to pivot the flows in the favor of a new bull trend, and then we'd have to go back to some sort of trade range style expectations for gold in this type of environment. Now, let's talk uranium, because there's a story of uranium companies and the uranium price. Let's dive a little bit deeper into this.
Well, Patrick, after more than doubling since their April lows, the URA ETFs, stochastics, and RSI peaked out a few weeks ago, finally rolled over, and then we saw a swing trade lower of only 6% down after more than 100% up on the rally that led up to it. So a very asymmetric move there. Then what's happened in the last few weeks is we rallied again, back up to, again, extreme overbought levels on the slow stochastics and RSI, and it's just rolled over again. Well, okay, if recent history is a guide, what we should expect is only a very modest dip of at most 5% from here, and then a resumption of the uptrend. So that next swing low on the stochastics and RSI should come in the next week or so, and I'll probably go the rest of the way in on my target allocation to the long trade on uranium and uranium miners. Rather than waiting out, I had been planning to scale in and try to get there by August 15th. It feels to me like this market is just ready to rip, and I don't want to miss it. So if we get even just a 5% dip, I'll probably use that opportunity to put the rest of my position on. And hey, you know what? If it turns out that we end up getting in late August into the early part of September, we get a more pronounced correction after all, then okay, I'll just upsize and allocate even more to the upside, because my longer term conviction about the bullish story here really couldn't be stronger. You'd need to have another Fukushima-sized nuclear accident or a nuclear war breaking out or something that big to throw off the nuclear renaissance, and the fuel buying hasn't even begun yet. So there's just tremendous upside here. This story is only just beginning. It would take a big exogenous change factor in order to change my bullish view longer term. So, and finally, the other really good news is after just really going more than half the year with almost no contracting going on in the term market for uranium, little bit of spot trading, but the more important market is the term market. There's been less than 25% of the typical annual volume has occurred entirely year to date in this market. For some reason, the buyers are waiting out, hoping for lower prices. I don't know what's going on, but they haven't even started buying yet. Finally, in the last 2 weeks, there are 3 different RFPs out in the market. There are contracting negotiations in the term market. That's a really big sign we've been waiting for. Now, of course, the really big sign is if there are announcements that the term price has moved up substantially because some of those deals have closed. Okay, we don't get a term price reported only once a month. This is a very opaque market. I wish it didn't work that way. So it really remains to be seen what is going to happen, but that would be the catalyst for the next big upside price move. Bottom line, it's time to get your seat at the table for the coming bull market if you don't already have it in uranium. Get that on before the WNA conference in early September, if you haven't done so already.
Yeah, Eric, the relentless rise of uranium prices, using like URA as an example, they've just been plugging away higher highs, old dips being bought. But what's interesting is that we haven't yet seen uranium prices make that kind of pivot. So when we're talking U308, still down at 72.40. And when we look at things like the Sprott Physical Uranium Trust, like the chart we have here, they are still pulled back. We haven't seen a decisive return to levels we saw earlier in 2024. With that said, this is a typical dip that when it retraces about half of its prior gains usually gets bought. It'll be very, very interesting to see whether this is where the Sprott Physical really gets going on the upside and this dip gets bought. That kind of follow through will be interesting. Now, Eric, there's been obviously this big squeeze in copper, higher highs, plugging to a fresh new 52-week high. What are your thoughts?
Well, Patrick, new highs above the Trump 50% tariff panic spike really confirm what I said last week, which is that the long-term trend is up and strong. Remember, I said there was an argument to short that market because it had obviously reacted kind of in a panic reaction to President Trump. I thought there was an argument for why it went down, and I said, I'm not going to be tempted to lose my longer-term long position by getting cute trying to trade in and out of the market. The uptrend longer term is just too strong. That's being borne out by this week's tape action with new highs above the previous panic high, implying that there's more to this move than just a reaction to President Trump's 50% tariff threats. Bottom line, as far as I'm concerned on copper, there's still plenty of room for more turbulence from further policy action. We don't know what Trump and Bessent have planned next. But as a trader, my reaction to that, whatever crazy vol swings they send our way, it's a buy the dip opportunity because the long-term bull argument for copper really couldn't be stronger.
The only observation I'd want to make here, Eric, though, is that while the COMEX copper price is up at 587 and punching that 52-week high, we really haven't seen similar style price action on the LME, right? So when you look in London and you're looking at global copper prices, they're still trading along those April and June highs. And so this really has been obviously a tariff-driven jump. And the question is, how long can the two diverge? And are we just one tariff announcement away from this converging after such a divergent move between the two prices? At this stage, I don't really want to trade this because it's really going to be almost solely news-driven for the next major move.
Patrick, before we close, let's hit that 10-year Treasury note chart.
So, Eric, when looking at the 10-year U.S. Treasury yield, it looks like the interest rate markets have been relatively stable. In fact, even on the shorter end, like when looking at the STIR market, like the short-term SOFR futures, everything is coiling up in ranges that have been established over the last 2-3 months. Here on the 10-year, you can see this wedge comes off of the January high all the way down to its March low. So this has been a 6-month consolidation of interest rates in a tight range, and pretty much this 440 level where we're trading is pretty much the dead center of that trade range. Which way will we see interest rates move? It will certainly spur some market reactions if we get things going. But where the interest really is on page 9, when I have the 30-year U.S. Treasury yield. And what you can observe is that that one continues to trade along multi-year highs right near 5%. The highs back in 2023 came in around 5.10, and the January high here came in at 5%. And again, that 5.10 level here was tested again in May. And so we have very close to a multi-decade level that could be broken on the upside in the 30-year. And the big question, when we're asking what could spur some anxiety in the equity markets, it almost certainly would be a breakout in yields, which would certainly get the Trump and maybe the FOMC talking about the current interest rate trends.
Folks, if you enjoy Patrick's chart decks, you can get them every single day of the week with a free trial of Big Picture Trading. The details are on the last pages of the slide deck, or just go to bigpicturetrading.com. Patrick, tell them what they can expect to find in this week's Research Roundup.
Well, in this week's Research Roundup, you're going to find the transcript for today's interview, as well as the chart book we just discussed here in the postgame, including a link to a number of articles that we found interesting. You're going to find this and so much more in this week's episode. We appreciate all the feedback and support we get from our listeners, and we're always looking for suggestions on how we can make the program even better. Now, for those of our listeners that write or blog about the markets and would like to share that content with our listeners, send us an email at researchroundup@macrovoices.com, and we will consider it for our weekly distributions. If you have not already, follow our main account on X at MacroVoices for all the most recent updates and releases. You can also follow Eric on X at Eric S. Townsend. That's Eric spelt with a K. And you can also follow me at Patrick Ceresna. On behalf of Eric Townsend and myself, thank you for listening, and we'll see you all next week.
That concludes this edition of Macro Voices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. Macro Voices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to Macro Voices on iTunes to have Macro Voices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. Macro Voices is presented for informational and entertainment purposes only. The information presented on Macro Voices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on Macro Voices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. Macro Voices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on Macro Voices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.